What are some of the other trends that you've kind of seen over the 40 years you've been in the space?
Yeah, well, okay, let me just first talk about the technology changes. I like to give the example when I was working on the trading floor in 82, 83 timeframe. I was what was called a floor reporter, and my job was to stand with the brokers, with the specialists who were responsible for keeping a market in stock. Every time they wanted to update a quote, they'd have to tell me, and I have a computerized Mark Sense card, and I'd slash all these boxes and it would go through a card reader eventually and the quote would be updated. Or if a sale took place, a broker would come into the crowd, they would have to stamp my ticket. And then I would slash all the buttons. If it was a big trade, I'd have to hit override, put it on the post and wait for a clerk to come around, pick up that card, put it in the card reader, and then I'd see it go across the tape, maybe 28 seconds later. So now you see the evolution of trading where obviously microseconds. I think the other thing that's happened in the equities markets throughout the world is the evolution of trading platforms. So, when I started on the exchange trading floor, 90% of the trades happened under that building. But with the evolution of Reg NMS, Reg National Market System, you have competing trading platforms. So today, when you look at it, whether you're looking at any platform, NASDAQ, New York Stock Exchange, you'll probably see only about 20 to 25% of the activity actually occurring within that exact actual market. One other observation that kind of gives a reflection of how the markets have changed is when I was on the trading floor, the Dow Jones Industrial Average was at about 1,200, okay? And it took 80 years to get there. There were these guys on the trading floor, rampant bulls, who had this idea that they were outlandishly bullish. They made up these buttons that said 5,000 by 2,000. And they went around the floor and they handed out these buttons, being rampantly bullish, saying, we think the Dow's going to be at 5,000 by the year 2000. Here it is at 1,200. People thought they were crazy. Well, fast forward to the year 2000, the Dow Jones was at over 10,000. So it doubled their expectations. And if you look at where the Dow is today, even with the geopolitical uncertainties and all that, the Dow Jones is flirting with 40,000. I guess my only point is equities are the place to be. Now, what has changed? Why has the landscape changed so much in the time since I started? I would really attribute it to, the growth of mutual funds, of closed-end funds, of 401ks. For example, I was at the American Stock Exchange when we created a product called the Spider, S&P 500 index, the concept of combining all stocks into an index. Tremendously successful. It's one of the most actively traded products in the world. I was at NASDAQ when they rolled out the QQQs, the NASDAQ 100 index in, I guess, around the late 90s, early 2000s. That has been a tremendously successful product, one of the most actively traded stocks in the world. And, the evolution and just in general of when I first started, it was just after dismantling fixed commissions. So people could trade for free and, pretty much it brought in the retail community, the evolution of 401ks, the globalization of the markets, really dramatically changed the picture when you look at it. I think, Callum, if I look at where we're at now for companies, I know most of the audience is most likely international. Many audience members either looking to join boards or on boards that might be considering going public or already have gone public. So I guess the question is, when that happens, how does it happen? And where do we go? Do we list on our local market or do we list directly into the US?